Hello, it's Ken here from smartforexeducation.com. In the session today, I would like to discuss the entry setup that took place on the 12th of March. I do apologize for the slight couple of day delay. It's been extremely busy on my side. Anyway, what I did earlier is, what I tried to do part of this case study is, as soon as I've entered a position, whether it's the euro, dollar, or any other forex pair, I will take a screenshot of the chart, and then basically I'll have it on my blog. So, and the reason for this is for transparency, because we're aware there's a lot of, let's just say, there's a lot of traders out there that will say that they've banked 1,000 pips profit on the trade, and it may seem all well and good, but unfortunately these traders look after the event. So there's something called hindsight traders. What I try and do is do the opposite. Myself, trading for many years, your success is based on the profit you've made, not on how many pips you've made after the trade. Okay, so by not actually entering any positions, but just saying, wow, I made 1,000 pips. So we're trying to provide transparency and clarity that if you're new to trading, yes, you might be skeptical with so many people out there, but this is just good information, and I'm just trying to be honest with what I do. So this is a chart of the entry setup. So the green horizontal line shows where I entered, and the red shows the exact price. Now what I'm going to do is, the reason behind the trade is, what I wanted to do is look at a larger time frame first. So I drew in basic add lines. If you go to lines on my chart, add lines, and then freehand, I drew in basic trend lines looking for some potential support in price. Now we can clearly see since the February highs, the market has been moving to the downside. So overall, short term, or since February highs, this is a trend play to the downside. So you might be asking, okay, Ken, we understand that. So why are you now trying to enter a trade based on a long? Well, the reason behind the trade was, since January, since the lows of the year, we've seen the market gradually start to make higher lows. And the decision behind that was, what I wanted to do, what I did is I drew in trend lines. So I looked to identify certain levels where price can find some form of support. So I took a low, and please everyone try and do this. Just pull up your charts, go to a daily euro dollar time frame, and then the lows of January 18th. Now you can take it from any significant low, but I tried to take it from a low January the 18th trend line, and I took it to the low of February the 15th. So we had a high low in price. So that's 2 points intact, and it's important to try and take it from the wicks. And then I was looking for a price to find a support on the next trend line, which we clearly saw with the support where we can see here. And then what I did, I zoomed to a smaller time frame, to an hour time frame. If I take this away very briefly, and what we saw is, we saw the price that was on 11th broke through and then retraced back up to the upside. So we had something called a flush trade setup. Now if you don't know what the flush trade play is, please go to one of my previous videos when I talk in depth about the flush trade setup. Okay, so based on the flush trade setup, I identified that sellers were trying to enter trades to the downside as the continuation play, and they got caught out. They got caught out because they thought that this market was at an area of good value for continued short. But based on my knowledge and my experience, this was a sucker punch play, and it was a good opportunity for long. May not necessarily be for a longer term play, but a trade you could have held for a few hours. And this is how the market played out. So the entry was, well, I can see here, the trade entry was at 13121, and please review the screenshot that I took after the trade. And then the sell stop, I had put a sell stop at 13076, and that was based on the low of the day. Okay, so I wanted to put a stop was just below the low of the day, so if the market continued to move down, it'll stop me out and I'll move on. We all take losses, we're professionals, we're honest with what we do. But in this situation, I had the bigger time frame. it showed that, okay, price is finding some form of support, which was good. Zoomed to a 1 hour time frame. Then we saw a flush trade setup, which sucked in a lot of new traders that entered the trade to the downside. And maybe you've tried to enter a trade on a breakout, which a lot of new traders do. And I went the opposite way, because I know when there's supply in the market, and the supply is not being pushed by the large or the smart money investors. So we saw a reversal of some sort. My entry was at 13121, and initially we saw a slight, a tight range. So there's a lack of movement to the upside, but I was very confident because I had this short-term trend line in play on the 1 hour, which meant that price was holding as the trend line. It was an uptrend line. Price was holding support, which was fantastic. And then my target that I had, or the two targets I had, what I did is I drew in basic fib levels, and I initially took it from this high down to this low. But I realized that the levels that it had in place, we had the 13131, and that was only 10 pips away from my entry. So I wanted to see whether there was any other levels that I could have had a target slightly higher. Because I felt, okay, if it held here retracement, I'm still looking for a further push up. So I deleted the larger swing play, and I placed fib retracements. So if you don't know where to go, go to lines, add fib retracements and freehand. And I took the levels from, sorry about this guys, I took levels from a more recent swing, short-term swing retracement, and then to the low, and that's okay, so levels in place. So then I had targets just slightly above the 40% retracement, and I had it at 13145. Then my next target were just slightly above the 50% level, because sometimes what happens, price will test above a retracement level and then sell off if there's going to be some form of selling strength. So the targets were in place at 13145, where I sold out half of my position, and the next second target with the remaining of the positions at 3160, just slightly above the 50% level, when I sold out the remaining contract. So it's a good play, good setup, where I entered long at 13121, sell stop 13076, first target 13145, and second target 13160. Okay, so good play. And this is what we try and do on a regular basis. We know we're not going to make profit every single trade, but welcome to the world of trading. If anyone tells you otherwise, then it's clear that the individuals are not telling the truth. So welcome aboard. If you want to find more information, then just pop along to my site. Also, we will be very shortly putting together an extra menu showing trades from my students. Okay, so my students that are following these similar strategies and setups, they've been entering some phenomenal trades over the last few days. And what I want to do for new traders, I want to document and show you that you can do it. Okay, whether you only have a couple of months experience or whether you've been trading for a while and you're not showing consistent returns, you can do it. So just stay patient, persevere in the market, but try and have the right education on your side. So the right arsenal, the right weapons that you can use in the market. And if you have any questions, comments, just don't feel afraid to let me know. And I'll speak to you soon. Take care.